learning to what I've discovered is that um, if I were to invert a chart pattern that is declining, if I were to invert it, it looks similar to what is an uptrend. However, what I've noticed that if I look at on a regular chart pattern and it's downtrending, I would see it with a green candle, and I would think to my mind that it's going to be uptrending, and I would top tick it, and then it would just drop. So so it seems to be a different skill set to reframe my mind to look at a downtrending chart pattern to trade it correctly. So if I were to trade a chart that's uptrending, then what it would do is essentially, if it's parabolic, then essentially one candle connecting with the other candle, another candle connecting, and it's essentially a singular movement from position A to position B. I can get in at any time between the support and resistance area to get out at the resistance area as well. Now, that's how it works. However, if it's if it had a stair step type of a uptrend, what that will do is it'll allow me to enter at a pullback, and that pullback has a signature which creates a reversal, mini reversal that will go in line with the current uptrend. Then I would enter at a point where it's at the bottom of that reversal area and then catch the uptrend and moving up. Now, if I look at it from the perspective of a downtrend and then I see a dip, thinking that it is essentially a pullback, is actually thinking in my mind is thinking like it is a major trend reversal and it's going to go back up based on that singular candle. And so I need to reframe my mind to reprogram my mind to thinking that when it's in a downtrend, it is essentially the inverse of what the uptrend is. It's amazing that I have to discuss it in this manner. It seems so logical to connect the dots and understand it. But what I've seen in reality is that under pressure and with actual trading that's being done at the moment, unless I unless I think it through, and pre-plan how I'm going to do it, then what I will do during trading is revert back to uh, just subconscious type of trading, and I would essentially go in a sequence of losses based on when the trend is actually in a downtrend. The trend that I prefer at this stage is essentially when a candlestick formation is in a trading range, then I can make a mistake, but it's actually bound by the support and resistance line that captures it in between. And so even if I'm incorrect in entry point, I am given another opportunity to take profit on it because it'll come back to the point where it's above where I bought it or below where I bought it. The difficult part is now looking in terms of the third component, which is a third component of the trading types, which is essentially the first part is the trading range, the uptrend, and then downtrend. Now, what I have to carefully understand is that stocks just doesn't go up all the time. It has to come back. So essentially, when something is range bound to a certain point, the fluctuation from year to year, month to month, week to week, it's going to range between the highs and lows. And when it moves significantly between those areas, for instance, when a stock goes up too much, it is split. And so it captures itself within a certain range. So that means that essentially, even though it's going up, it's going to be coming down probably about 48 to maybe 50% of the time. So that means that when I'm taking trades for the uptrend, I'm missing out. I'm essentially missing. So if if the 20% of candlestick formations are range bound situations and 40% is the uptrend, then I'm leaving out the 40% that's actually downtrending. So in order to enhance my opportunity in the market, then I have to become acclimated to the environment where the candlestick formation is downtrending. I've been scratching my head about that for quite a while. Now that I see a clear distinction between those three types of regions. Of course, when I first started, I had no idea what those were. So I couldn't I even though the candlestick formation was showing those characteristics, now that I've experienced it and saw it in the market, then I can clearly distinguish between those three categories of formations, the setup, the formations in the candlestick formation. So now what I need to do is essentially become a little bit more sophisticated in trading so that I can fill in that hole where that 40% of the market is essentially uh, which essentially have been taking my profits away. Okay, and so what I can do now is until I get acclimated to the environment in a profitable manner, then I can either avoid it or take advantage of that situation and learn how that formation occurs, essentially a stair step down kind of a formation. If it's in a parabolic down mode, it's easier to comprehend. But when it's in a stair step kind of a way, every little stair step can be confused with a major trend reversal, which in many of the instances I was caught up in these losing streaks because of that.